you're probably ignoring one of the most profitable assets in the world. And guess what? Billionaires aren't. While most people obsess over stocks and crypto, the ultra-wealthy have quietly been pouring billions into something far more grounded. Bill Gates is now the largest private farmland owner in the US. And he's not alone. What do they know that you don't? By the end of this video, you'll understand why farmland is becoming a favorite asset class for the rich, and whether it should be part of your portfolio too. The best part? You don't need to own a tractor. Let's start with this. Farmland isn't just dirt, it's a money-making machine. It produces food, which the world will always need. It appreciates over time, often faster than inflation. And in many cases, it generates rental income, just like real estate. Here's what's wild. According to USDA data, US farmland has appreciated by over 6% annually for the past 50 years, with almost zero correlation to the stock market. That means while your portfolio crashes during a recession, your farmland investment could be quietly growing. Now think about this. Farmland outperformed the S&P 500 in the last two major market downturns. During the dot-com crash and the 2008 financial crisis, farmland didn't just hold steady, it grew. That's why it's called a non-correlated asset. Its value doesn't rise and fall with Wall Street. But this isn't just about safety. This is about returns. Farmland offers three streams of income: annual rent from farmers, appreciation in land value, and, if you choose to farm it, cash from crops. That's why it's quietly beating traditional investments in the long game. And yet, most retail investors never even consider it. Why? Because until recently it was hard to access. It meant buying actual land, managing it, dealing with regulations, and finding reliable tenants. But that's changing. So how do you actually invest in farmland without buying hundreds of acres and learning how to operate a combine harvester? Until a few years ago, that was almost impossible. Farmland was an exclusive club. You either had to inherit it, be a farmer, or have millions to spare. But that's changing fast. Thanks to a wave of fintech innovation, farmland investing is finally being democratized. Platforms like AcreTrader, Farm Together, and Harvest Returns are opening the gates to investors who never thought land was within reach. Here's how it works. You choose a farm from an online marketplace. The land is professionally managed, leased out to a farmer, and held for a fixed period, usually between 5 and 10 years. You earn passive income from rent, and when the land is eventually sold, you benefit from the appreciation. In some cases, these platforms even pay quarterly dividends. The target returns between 8 and 12% per year after fees. That's competitive with the stock market, but with a fraction of the drama. Let's take a real-world example. An investor puts $25,000 into a soybean farm in Illinois. Over the next 3 years, they collect regular rental payments. Meanwhile, the land appreciates over 20%, and they're on track for a solid return without ever setting foot on the property. But there's a reason this opportunity still flies under the radar. For one, liquidity is limited. Farmland isn't like a stock you can sell with a click. Your money is tied up for years. You need patience and confidence in the long-term value of the asset. Then there's the question of quality. Not all farmland is created equal. Soil composition, access to water, regional climate, crop diversity, these factors can make or break a deal. The top platforms work with agronomists and data analysts to carefully vet each farm before listing it. And of course, there are fees. Most platforms charge 1 to 2% annually in management costs. It's not outrageous, but it means your returns need to be strong enough to justify the expense. Still, when you consider what this type of asset brings to a portfolio, low volatility, real cash flow, inflation protection, it starts to make sense why the wealthy are buying land while the rest of the world scrolls past. Farmland is quietly becoming more than an investment. It's a hedge, a legacy play, and in some cases, a form of power. And the truth is, something much bigger is happening behind the scenes. Land is turning into a strategic asset in a world of climate risk, food insecurity, and rising global tensions. Let's break that down. Over the next 2 decades, we're going to witness a global power shift centered around something most people completely overlook: fertile land. This isn't a prediction, it's already happening. Climate change is accelerating, and it's redrawing the map of global agriculture. Places that once produced massive food surpluses are now battling unpredictable weather, water scarcity, and soil erosion. Meanwhile, previously undervalued regions like the American Midwest, Eastern Europe, and even parts of Canada are gaining strategic importance. Farmland is no longer just a source of food. It's becoming a cornerstone of national security. Governments are taking notice. China has been aggressively buying land in Africa, Latin America, and even within the US. Middle Eastern nations are leasing massive tracts in countries like Sudan and Ukraine to secure future food production. Why? Because when you control land, you control food. And when you control food, you control people. Access to water is now as important as the land itself. In California, farmland with water rights sells at massive premiums compared to neighboring land without access. It's not just about what you grow, it's about whether you can grow at all. And the scarcity is only going to get worse. Global population is on track to hit nearly 10 billion by 2050. At the same time, we're losing about 24 billion tons of fertile soil every year due to poor agricultural practices and climate degradation. More people, less land. You don't need a PhD in economics to know what happens next. Prices rise. Demand intensifies. And those who own farmland will have one of the most resilient, appreciating, income-generating assets on the planet. Now let's talk strategy. The ultra-rich aren't just investing in land for returns, they're thinking in terms of legacy and resilience. They want something that holds value no matter who's in office, what the dollar's doing, or whether the stock market is red or green. And farmland does just that. It generates income from rent. It appreciates over time. It provides a hedge against inflation, geopolitical instability, and market crashes. And it gives investors something even more rare: peace of mind. Because when you own farmland, you're not relying on Wall Street, Silicon Valley, or the Federal Reserve. You're relying on the sun, the rain, and the soil, forces that have never gone bankrupt. But here's the thing, you don't need to be a billionaire to get in. Technology has opened the door. Crowdfunding platforms and fractional ownership models mean you can start with as little as a few $1,000s. The real question is, are you thinking long-term? If you're chasing the next meme coin or speculating on quick flips, farmland probably isn't for you. But if you want an asset that's tangible, stable, and aligned with the most fundamental human need, food, then this might be the smartest investment you're not making yet. Because while others are panicking over interest rates, layoffs, and market volatility, farmland investors are quietly collecting rent checks from crops that feed the world. That's not hype. That's long-term wealth building. And here's the final truth. The best investors don't follow trends, they follow fundamentals. And what's more fundamental than land? So are you going to wait until prices have doubled? Or will you start looking now? If this opened your eyes, hit the like button so YouTube knows to show it to more people. Subscribe if you're serious about building wealth beyond just stocks and crypto. And drop a comment below. Would you invest in farmland? Check out our next video where we reveal overlooked asset classes that perform even better during a recession. Because farmland is just one piece of the puzzle. The sooner you start, the sooner you grow wealth. And the longer you wait, the more expensive everything gets.